All right, good morning, everyone. Happy Wednesday. Let us know if the audio visual is good in both rooms, Pitbull room and the PTG room. All right, Steve says it's good. Magister, how about yourself? How does it sound in the Pitbull room? Check, check, one, two. Sound good? All right, great. I think we have Manny with us as well. All right, so Manny's on with us. Great. All right, great to be here. Glad. So let's get going here. Wednesday, March 25. Springtime is here already. Is today opening day? I'm not sure. It's getting close, anyways. Wednesday, March 5th, 2026, the audio edition to the Daily Trade Strategy Brief as we begin every day here at Polaris.
Good morning.
NFA
Every day,
compliance
fresh
rule.
start. Sorry about that,
Paragraph.
guys. I had to lose David.
Okay. Any?
Okay.
All right. So cycle day 3 is part of our 3-day cycle Phenom.
There
And
we go.
again, from Sunday evenings, blast
I
off.
think I lost David's audio, so hang on here, guys. Let me just sort this out.
Okay. Hold on. I think Manny and I are talking.
Guys,
Yes, I can hear them over one another.
fresh here. Bear with me.
All right. Anyways, uh, for you guys, we were looking for yesterday, all right, which was a cycle 2. We were looking for some balancing, and we ended up getting that. So now this morning, coming in on a cycle day 3, this is part of our 3-day cycle structure. Cycle 2 here. We still have a continuation on the balancing here. Unfolding. You know, what I like to do is identify, show. But I typically will, most everything that I've identified and point everything out to our community, has a high confidence level of validity to them. But I cannot once think I can't back that statement up by saying I spreadsheet that I've done over 10,000 trades that shows certain percentage wins and so forth. Again, I'm not a data miner in that regard. So, but what I do encourage everybody to do is if you find something that, certainly is interesting, then what's the next step for the individual? Go research it. Search. You could easily, take a particular, just looking back through your charts as you normally would do, say, just reviewing the past week and then asking the question, high, okay, prior high here. How often, how many occurrences has happened where prices popped above it and then reversed back down below it? And that's fairly easy to do without taking any measurements of how, go up and reverse or not. Yes or no, true or false. Okay. So you start your basic research under that premise. And then you could easily probably, you could start from the days range, right? And you could go back, easily a month or two or three, even in a fairly short period of time, and say how often did price, move above or move below a particular. It does take go and then take it to the next stage. Well, how far did it move above a high or below a low? What was the, excursion beyond the, and then years back. When you ask those type of questions, you're going to lead you to an answer. Many people say, well, will it go up or will it reverse? That's not going to lead you to an answer. It's going to lead you totally astray. So ask the right questions, do the work, do the research back on it. And then again, doesn't have to be super comprehensive. You could simply take a sample size, right, of 50 trades, small 50 trades. Of those 50, what were the occurrences? And then you'll start building a picture. And then, of course, the more data that you start adding to it, you're going to start seeing patterns emerge even further, which you're researching. The issue I find with a lot of people over the years is they're, you know, right? Most people are lazy and they won't do it. So,
Well, here's one thing about that is that look, I get it. Everybody has, people, time is valuable, and we spend all. But like, if you want to research or look below and fail, right? So here, just map out. So each time you see one, write it down. So I tested two ways. I'm back work. So here, a 5 chart right? Here. Just go through this because I think it help people. And I used to, I would get, a glass of wine, and I would sit here and I'd write in the chart like this. And any being a short, I'd put an arrow there, and then I'd click the next bar. What was the outcome? Okay, got it. What did I hit my scale point that I determined when I entered? Okay, so then I got down. Okay, I trade here, I got scale out of it. And I would build up a database like that. And I would, do that for an hour or so on a Friday. Over time, I built up a database. I would do it a couple times a week, and it became, for lack of it became fun after I would see 50 entries. And then I started to develop a data set. Okay, on these 50 entries, I will stop that of that out. So that's one way I do it. Is keep a notebook on your desk, and if you want to research a peak, like David Cole, if that's what you want to research, keep a notebook on your desk in real time. Start building your database. Go to the back of your note. Say you keep your daily notes in the front of your notebook. Flip to the back and start writing backwards. Right. So just write the date down, March 25th. Write the conditions down. Okay, we opened here, price traded above the level, looked above, and I would have entered here. So entry at, say, I don't know, what was the overlay? Say entry at 668, 5-point, move on with your day. The next, you write down the conditions. It doesn't have to be a lot, maybe 4 or 5 entries. Look above and fail, enter here, stop here, 6680 entry, 6675 first target, 6685 stop. What was the outcome? Write it down, move along with your day. What will happen is you're not tackling the entire project in one day, but in one day, I have days, literally, I'm buying and writing it down every day. And there, what happened? That once you start building up a database, guys, there's nothing that's going to give you more confidence of going haywire than knowing, hey, I know that on 10 look up 5 and still make money on the other 5 over the course of these 10 trades. And for me, there's nothing that tempers the emotional component than having that statistical reference. Because if I get stopped out, I'm like, okay, fuck it. I don't care. I'll take the night. Too emotional about that loss because I know that, hey, this was 1 out of 10 and I'm expecting to lose 5. There's an expectancy there, right? So you brush it off. Now, if you get now where it gets testy, and this has happened to me, is when you've taken the 4 losers in a row and then the 5th one is a little testy, but you got to stick with it. The idea here, guys, is to be consistent about it. Either do it in real time and build up a database over time. I think that having a good mix of both is super beneficial. Lately, I just do the real time analysis because it's easier.
Yeah, man, Manny, I absolutely agree with your approach. As a matter of fact, it kind of, mirrors exactly, how I've done my work in the past. A lot of people like to plug in numbers or, conditions into whether it's Ninja Trader or some other, platform and do, run a back test, automated back test and then spit out some numbers. Problem there is that it doesn't really give you, it's effective to a degree, but really doesn't kind of what you're trying to measure. What the hardest part is getting started. Like anything else, right? You're starting to work out, you haven't worked out in ages, it's gonna
Right.
hurt.
Good
It's the
point.
same, analogy. But once you start getting going and you're starting to build up a little bit of, momentum and so forth. And again, whether you're doing it off hours, maybe in the beginning you're doing it off hours, but once you have perhaps a spreadsheet established, then you can, continue on and it's easier. You see something live during the day. I always say to, if I'm sitting there not doing anything and I'm waiting for the next trade, I ought to be doing something else, right? I ought to, maybe I'm doing a little, I have another screen and I'm using it specifically, which I do sec back testing, looking for, and then filling out your spreadsheet, a little bit trade by trade or something like that, right? So again, I know we all want to be, active, in our trading and so forth, but a lot of times there's obviously a lot of dead time during the day where you don't really, you're not really putting a trade on because you're waiting for, your particular setup. Let me just show everybody one of the things. Let me know, see if let me know if you see this particular this graphic, this spreadsheet that I have. Does everybody see that in the pit room? All right. Steve over here does. How about in the pit room? You guys see that? What this is, and just um, let me see if I can get my little pen up here. Where is it? My pen. This is a tool. It's not available for public consumption right now, but it is something that I've built for myself. And what this is, when I start any research project, right, I take a particular. All right, let me just explain here, right? So I don't want to get too far ahead of my what I want to say. So there's two sections here. One, it's called the maximum favorable excursion. These terms, most everybody should be familiar with, but if not, maximum adverse excursion. Okay, and they just look like profiles, right? So let's take an example of the look above, look below fail phenomenon. Okay, so we got a level here like we saw today. Prices move above, right, and then reverse back lower. So that's the scenario. So taking that now, that should be an easy, as Manny was explaining, that can be an easy, fairly straightforward uh, pattern to identify and record. So what are we looking for? So the price, has gone. So the reference level is the horizontal line, right? Could be a prior high, prior low, whatever. Okay. So just using this as an example today, prior high. So what's the setup? Setup is to punch through it, right? And then looking for, the entry. Okay. So an entry, again, you determine how you want to enter, but I'm just using it as an entry, let's just say cross back down below that level. All right. So now you get two things that you can begin to measure. How often does that occur? And that's easy enough. But then what you want to look for is you want to look for, well, if the trade is actually the direction of the trade we're looking for in this case is lower, so we're looking for a short. I want to know, well, how far did price go against? Okay. So what you can do is you can say this would be your reference entry right here. Now it's not the trade entry, but a reference. So how far did price go higher, right, before it reversed? That would be a maximum adverse excursion from the reference level. So this is a reference level, not the trade entry. So this could be a trade entry here, but this is a reference. Now, the next thing you want to measure is from the same reference level, which would be considered your entry. Okay. How far did price go down in your favor? And you have to determine at some point where the trade ends. I'm not going to get into that right now. I'm just using this as an overall kind of visual example, right? So we got two things, right? An actual trade setup, what reference they're using to start measurement, and then measure the maximum adverse, which is against, right? And then favorable, which is for. Make sense to everybody so far? Okay, so what I've done here, and again in various strategies and things that we looked in fashion, because I programmed it to do so to select certain trade setups, right? Right, I remember different with this, but it's a short. Again, we're using this one as the example signal, right? So the question then is, how far against? So the down below here is the maximum adverse. So what it does is it creates some sort of a profile, right? It creates a profile, and so it's not it's similar to your standard volume profile, okay? But what we're looking to determine is two things, okay? How far has has price historically gone against, and vice versa off of maximum favorable. So what you tend to get, and what's the question that you're looking to answer? After entry, where am I going to put my stop? Okay. I don't want to put my stop in an area where there's high frequency of activity after the entry. You're going to get stopped out very quickly. So what you want to do is you want to say, well, how many occurrences happen at various price points? So you can see here 0 to 1, 1 to 2, 2 to 3 points, 3 to 4, etc., all the way up to scale messages, actual trade signals and occurrences, and what the percentage of that those are based upon the entire sample size. Right. So, and all this stuff is done in an automated fashion. So you can see here, we want to do, and we want to stop anybody. I want to stop of occurrence. You can see that in a profile very easily, just like a volume profile. You're looking at that, right? So you can see here, that the heaviest amount of is between what, 3 and 4 points, 4 to 5, 5 to 6, 6 to 7, maybe 7 to 8, right? And so that's real heavy. I don't want to place my stop in this area. I'm going to get there's a high occurrence or higher occurrence, right, of perhaps getting stopped out after entry. So where do I put my stop? Well, I want to go where the lowest occurrences are. So now you can see in this slate, 9 to 10, 10 to 11, 11 to 12. Now you may say, well, I don't, Jesus, 10-point stop, 12-point stop. Well, a lot of this stuff is based on current volatility. Okay, so if you're trading minis and a 10, let's just say a 10 or a 12-point stop is really outside your risk parameter, maybe you need to adjust, going out doing micros, all right, for a particular trade. Okay. It doesn't mean you're always going to need a very large stop. All right. Again, depending upon the structure of the entry. But what I'm saying is using what is the maximum? What's in his, and that some real good to at least to formulate how you're going. On the flip side, the maximum favorable side, okay, for a particular trade. So how far has a trade such as this gone in my favor? Well, actually, the highest occurrences are going to be what? 0 to 1, 1 to 2, 2 to 3, 3 to 4, etc. Right? And then as you move higher in distance away, the next tendency is going to be less and less and less and less occurrences. So decision, where am I put my targets? Okay, levels. So naturally, what we like to do here is get to a point where we scale out and we can move our stop, right? We can move our stop to break even. So now we've protected our capital. And then the remainder of the trade, it is just how it's going to unfold. And we may have some, but based on historicals, we pay at level based upon the frequency. So maybe in your first exit, you you want to get risk free. Okay. So what does this do when you're doing a study like this? And again, all this stuff can be done manually. Okay. It is exactly what Manny was talking about. You just create a spreadsheet and you're doing it one at a time. I recommend doing that as Manny was outlining. I recommend doing that manually because you're gonna get the real sense of what that particular structure is doing for you. You're gonna learn more aside from just plugging in, an research. It's just much more beneficial. Unfortunately, it just takes a lot more, more time. But as Manny was saying, and again, once we get started on it, then you can kind of add to the, add to the data, increase her aged in what's, how these trades, whatever you're researching, is unfolding, how it's unfolding. Okay, um, so this particular one, and then I have some metrics up here where, again, they're meaningless at this stage, right, to you, but what's the average favorable? So 32 and a half points. What's the adverse? 9 for that, right? And it's a 1.72. That's not risk reward, by the way, right? But it is a score of 170, which means it effectively has a positive expectancy based upon adverse and favorable excursions, not P&L, right? Then from this is kind of like this is my base starting point of any strategy, any idea. And again, you can apply this to any idea you have. Okay. How often, again, create whatever the strategy scenario you want to research. And this for me anyway, this has always been the starting point. Is if I don't have, I can't proceed to say, like, how position size. Well, I don't know how to position size unless I know what the average versions are. And again, entrance must be the so this is kind of how I started. It's not an easy, again, anything that's worth anything, and I'm sure you've all been taught this from younger years, anything that's been worth anything, requires time and effort to explore, right? Just tell me what to do, or just give me the signal, or tell me what, put me into the trade or whatever. And that may work for a very, very short period, but it's not going to help you whatsoever. Full of curiosity and an idea. What type of trade? And again, you can take a trade idea from anybody. We're all sharing ideas and in what we do and how we do things. So this is, one of the core approaches that I take, for doing this. I got a question. In what time frame to determine the look over? Uh, that basically, John, is up to the individual. All right. There's no set. It's just really, could be any time frame. Could be ticks. Could be ticks. It's just really anything. All right. Um, yeah, the people that don't want to do the work, they want to climb on the shoulders of the giant. But they're gonna.
All right, guys. Hey, so just to back to circling back to David's point until he comes back in. Really quick review. So just a heads up, guys. I lost this connection. This platform keeps crashing on me, and I have an NinjaTrader up and working, but I don't have I'm unable to get my charts loaded. So I'm kind of working off of these back. And this I posted. I finally got the visual on the trade plan, and I wanted to buy either reclaim of 66.48 to 5 point. We were looking for an early high, right? So we're looking for an early high into 10:30. 10:15 to 10:45, and I don't want to be long into that. So it's kind of on this time study with you guys. Point about back testing, I think, so, look, guys, I'll tell you the truth. I have when a form, right, align it like I did here, and just go literally bar by bar. Line right up here, level. This was the level. Oh shit. This was the level. I waited for it to wick. Right, so you'd have it. Yeah, you're live now. So that would be bar by bar work. Really go bar, right? And then I'd write down what my entry point was. I'd take the close of the candle, write down that, and then I'd write where my scales were, and then I would go one bar at a time and see if I hit my targets. All right, and that was early. That was really invaluable for me gaining confidence in my setups. Right, that was a key step in me getting confidence in in my trading ability. And a lot of this stuff, guys, a lot, to be honest with you, a lot of this stuff is, as David said, is about doing the work. When you do the work, you walk away with a sense of confidence in that you put some time in, and the statistics and the outcomes of that work kind of become tertiary. Every time I've sat down to do the work, I've learning what I would set out to do was one component of it. However, there was another component that came of it, and it was I gained confidence because I was putting the time in, and that's right. Over time, you develop a database. Okay, well, I know I'm losing 5 days, and I know I'm to solve the low or all right. So let me just make sure I smoke this. Like the competitive spirit in me. I feel I might not putting up the right way here, but let me just check it out. Let me see if this loaded again. God damn it. Relaunch it. Okay. Change plan.
All right. While Manny's doing that, you can also see everyone on our charts here. That again, maybe it was overshadowed by the presentation there on the what I was doing. But let me just post this up. Again, you can see the various trade setups here. And again, price is reversed. Again, back up to the 810 over here. Idea are options and then continuations. That's a pullback on the long side. This one, again, this is what we refer to as a 4 entry scale, right, on that one. And then over here on the far right, again, a similar trade that we saw earlier where prices pulled back. And session on demonstrating the various trades that we look for in our work. All right. Duncan Clark asks, is anybody's intraday scalping? I don't scalp, Duncan. We are looking, for our core premise is we're looking for structural shifts, long, short, intraday, where we stay in alignment with them. There are various ways we identify those shifts, but once we identify those shifts, we work to get in alignment. Setups here, our structural setups and trades are designed to do. All right. So, and again, right now, these are all automated. They all, for everybody when they're learning this, is to learn them in a manual way. And then, you know, somewhere down the line, the automation is, we refer to the automation as an auto trade assistant, and again, the operative word, okay, being, and again, it's there to assist you if some some folks are trigger happy, and and other people on the opposite side of this, they're hesitant, and to somebody trading, if you're trading too much, or if you're over trading, you're just kind of reaching for anything and everything, then you're not really following anything that's very, very structured. And again, on the flip side, if you're hesitant, it's probably because you're having difficulty of, you know, when to take the trade, how to take the trade, and so forth. So we've all inkling, uh, you know, reduce the amount of trades if you're trigger happy, if you're over trading, and help you in the decision process if you're having difficulties there as well. All right. So as always, again, as you all know, we really need to state this occasionally, right? We do state it at the beginning, but of course, all these trades are, and of course, past performance is not indicative of future results. Sorry, I have to say that, but I do have to say that. But you all understand that. So make the regulators happy. Yeah, JM thought. I thought it was a guarantee. I guarantee. Yeah, I guarantee. All right. Well, it's always nice when Mr. Market cooperates and gives us some trade up. Most of the better trades, at least that I see, are morning trades. I don't know about anybody else. I think the afternoon is just horrendous. I try to get as much as I can get done, as early as I can get done, and then you know focus on other parts of you the business and members and stuff. So, all right, let me know if you have any questions, comments. Right now, we're kind of now we're back in the mid, right? Um, I call this the Romulan neutral zone for you Star Trek folks, aficionados. Romulan neutral zone. You can see that the VWAP is pretty darn flat. All right. So, I mean, look at the boxy profile we have. So, what do we have? We're basically still in range, right? What did we brief on this morning? We briefed on the potential for continuation of kind of range bound activities. All right. So, yeah. So now it's all, I guess the common term now is chop, right? So at this point, there's not a whole lot to discuss. So hopefully you got a little bit out, little education information about how that presentation, adverse excursion, favorable excursion. Um, Hopefully helps in your research. But it's not that difficult once you get going with it. Duncan asked, "You watch for price action on the hour?" So 8 a.m. level hit and melted. Um, I don't necessarily, personally, I don't necessarily, are referencing. Well, let's put it this way. I guess I am, all right, indirectly, Duncan, because I use a 60-minute, right, chart. So I guess the answer would be yes. But I'm not necessarily, I thinking of that, every hour high low. But I guess inherently I am, right? I'm not explicitly watching every hour high low, right? Obviously, prior highs, prior lows, openings. You can see on my chart here, right? I get the prior opening, prior close, right? Prior high, right? Prior low. I'm getting all those references, right? Are important. Obviously, volume points of control, right? Value high, value. So multi profile, composite profile, and then this one is currently for this session, right? So I do pay, attention to profiles. I don't teach profile. Lots of free information out there about market and volume profile. I don't teach it. I discuss it, but it's up to the individual to research that. There's so much free information out there on that, right? I mean, it's well traveled, all right? Is it wisdom or is it failures? People become wise. I heard from somebody years ago. I can't remember who. Wisdom comes from failures. Wisdom is developed from failures. Yeah. So I guess if I'm wise, I've failed quite a bit. Failure and success and all that. Again, I want to get to kind of the psychological aspect of it, but you just got to learn to accept. It all depends how you frame out failure and success. How do you define it for yourself? Everybody essentially defines it differently, for themselves personally. So you just got to find out, what's an acceptable failure, right? I mean, within, kind of think about, within the norm, thinking about profiling, right? Profiles, volume profiles and such. There's a value area and a point of control of failures. Could you look at it that way? Happen, but there are more smaller failures, that occur quite often. I want to focus on perhaps those more often, right, and try to make any adjustments that are necessary. But accept a large percentage of failures. They don't have to be catastrophic failures. They're failures where it teaches you, right? Like Ram says here, failure teaches one to be wise, right? Failures teach you what to do and what not to do, right? Little kid puts his finger on a hot stove, he's going to burn himself, and you tell him not to or her not to, and they're still going to do it. And they're going to burn themselves. But, that's also going to be indelible in their mind of what not to do. So it was an initial failure, but it became a success. Not doing that again. And so throughout your entire life, you get these little fail. Again, just take a look at baseball analogy. I know Manny's a big baseball aficionado, right? I mean, you go up at bat, right? And even some of the best hitters out there have a 300 or so, you know, batting average. Well, that means they fail 7 out of 10 times, right? Yet we view that a 300 plus batting average as what? Success. So, in one sense, you just gotta accept whatever's acceptable. Same thing with trading. Yes, we have real money on the line, or in most cases, a lot of you are trading funders, which are simulation, but it's effectively the same. So you got to accept failure. It's just part of the game. It's just, I mean, I know everybody knows this logically. It's not the logical, it's the illogical in you. It's the emotion impact. If you have a lot of small failures, it's not as impactful as a real big one, right? So you learn to accept the small ones and move on. So trade smaller. You have a smaller loss. Yes, you have a smaller gain, but it's not impactful either side. So then you learn to just do what? Oh, I got to, you know, pull back to this level. Okay, I'm going to buy that. Am I betting the farm? No. Why? Because that would be impactful. That would be a big failure that happened. Trade, a big shot. I want to be something about whether you're a big shot or not. I can tell you right now, nobody cares. I mean, we're empathetic, we're sympathetic, and all that, but and we're encouraging each other. But at the end of the day, right, the only person that has your best interest is who? Yourself, right? So we're all here together to try to work with one, here, everybody collectively as community. But at the end of the day, I'm not taking your trades, right? And if I win on a trade, great. Oh, that's what I'm saying. So every individual trade and such. So I'm giving a psychology lesson here, so I didn't mean to do that. Uh, Duncan asks, "What is your daily walk away, trade count, or market structure exhaustion?" Um, right, and no more, no further trading. Is that the idea? Yeah, when you're done for the day. So, so in mine, it's a couple different things. Number one, it's all dependent upon what my schedule is. Yeah, okay, daily loss limit, things like that. One is based upon my schedule, right? So if I have a meeting at a certain time of the day, well, I obviously need to be done by that, right? Win, lose, or draw. I look at it as win, lose, or draw. Okay, so um, not to put hard numbers on anything because again, the hard numbers are meaningless. What the concept to me is more important of doing. So have a goal in mind, right? So what you have to do to drill it all the way down to an individual trade or daily basis. So you got to start as I'd like to make X over the year. Whatever you say, well, okay, so in order to make that X, what do I need to do monthly? Break it down. What do I need to do weekly? Do need to do much? So again, the number's going to decrease, right? Yeah, on each stage. So you may say, I need to make 1,000. I'd not need to. I'd like to. My goal is, right? Never put need in anything. Okay, that's another trap to do this. You know, like my wife would say, I need to make dinner. Right? She's the cook she's the chef in the house, not me. I need to make dinner. I said, no, you don't need to do it. Yeah, I need to do it. I said, no, you get to do it. All right, you get to do it because you enjoy it. Right? So we don't put need in anything because it's just going to mess you up psychologically. But in any event, going back to the question, core question. Um, so have a daily, you know, goal in mind. Drill that down, whatever that goal is. All right. Also have a daily loss limit in mind. Just like the fund, or the brokers can actually, establish a daily loss limit on your account, and then when it hits that limit, you're done for the day. So Duncan says, "Well, when are you done for the day?" Well, I'm done if my daily loss limit is hit. Period. I don't reset the account if you're trading a funder. It's easy with the funders, right? You blow an account. What do you do in your middle of the day? What do you do? I'm just going to reset, rat bastards, right? The market got me. They're not going to get me. Well, what's happening in your head, right? What's happening in your head? It's the revenge, right? So what do you do? Oh, it's $100 to reset, right? So not a big deal. I just, the money doesn't matter to you, right? It's $100, no big deal. So I'm going to reset, and then you go in again and you try to make that back and then some, and you blow it again. How many resets have people done during the day, right? So think about that for a second, right? It's easy to do that with the funders because you get blown out. I'm just going to reset. Going to blow out, reset. That's not how you should do it. If you're trading and you hit a daily loss limit, you should be DFD. Okay, reset for the next day, but allow yourself to be done for the day. So that's one aspect of that side. Okay. But how about, and that's the important one because that's where most people get blown out. Right. Um, is it a bucket of water over the head when emotion taps you on the shoulder? Yeah. Let's get it. Let's get it back. Trade back. Right. What's my bucket of water? What's my bucket of water? All right, the ice bucket challenge. If I blow an account, which I've been many times, like everybody else, right? I'm pretty much done. I give myself that time out. When you get a 2-year-old, right, that's has a temper tantrum, what do you do? You're gonna keep having that 2-year-old, right? Freak out. Maybe you've given him too much sugar, and he's on a sugar high, and then he He crashes and he has a temper tantrum. Okay. So what do? You got to give him a timeout, right? To calm him down. So that's essentially what you're doing when if you blow an account or whatever you hit, right? And you know what the frustrating part of it will be is this, and I know you've all experienced it because we all have. You blow out, you honor not resetting, right? So you honor man. This should be all part of your plan, by the way. Okay, you should deliberately say, if I blow out, I'm DFD. I'm done for the day. Taking a walk, whatever. Okay. Don't start up a new account. Don't reset. You're done for the day. Just didn't click today for whatever the reason. It's really important that you do that. Giving yourself a timeout. All right. But the frustrating part of that is, and you've all experienced is you blow out, you don't reset. Let's just say you don't reset. You're honoring your reset. You're honoring if you stop out your daily loss limit. And then just to see now you're monitoring the trades that you would have typically taken, and all of a sudden they're working. Now you're even frustrated more, right? Well, if I had reset, I would have gotten those trades. How many of you have been there? Raise your hands. How many of you have been there? I got both my hands up, right? How many of you have been there? Come on, be honest. Come on, post it up, right? We've all been there. Yep, we've all been there. Okay. So, again, this is all comes down to the psychological, portion of the program with yourself. All right. Um, so, work yourself where, if you blow out, done for the day. Now, on the flip side, let's talk about the flip side. All right. What happens if you're doing well and you hit your goal? My question to you is, do you have a plan for that? Say you got $1,000 for the day goal. You hit your $1,000 day. Some of you may stop, and would and then again, where's the frustration there? Well, I stopped, but had I continued, what would have happened? Oh, I could have made more. How many of you were there? Okay, yeah. So many of you were there as well. So my question is, right, in your planning stage of your trading, do you have a plan for that? What happens if I reach my goal for the day? Remember, your bigger goal is to do what? Reach that final year-end goal that you've established, right? And then you break it down all the way to the daily. How much do I need to make daily? But one thing to keep in mind, you're not always going to hit your goal every day. So I'm talking about the goals that I'm talking about is on average. So what does that mean on average? That means that some days, even though you've hit your goal, okay, and let's just say you're trading well and the market's rhythms are there. Those are the days that you really want to continue. But I hit my goal. Well, what's happening in your head? I'm going to tell you what's happening in your head. I don't want to give it back. What happens if I take the next trade and I lose it? How many of you have been there in that thought process? Right? Rhetorical question, but I know everybody has. I don't want to give it back, so I got to stop. I'm afraid to give it back. Been there, done that, everybody, right? So the question then becomes, and the reason why I ask these questions like this, the way I'm structuring it is because that's how I was taught. My mentors posed the questions to me. So I'm kind of posing questions to you. So we're in that scenario where you hit your goal. Should I stop or should I not? Rhythms are good. You're feeling good. You're in the zone. right? But you're afraid to give it back. That's the scenario. So my years back asked me a simple question: do you have a plan for that? And to to quote to quote Clint Eastwood, do you have a plan for that? Well, do you, punk? Okay, so ask yourself that in that way. Do I have a plan for that? Do I, punk, have a plan for that? Okay, so have a plan for that. What is it? Well, one plan could be, I'm going to take the next trade, and if it's a winner, fantastic. Yeah, I got to know. That's great, fantastic. You're expanding upon your goal, which is what you want. But how about if it goes against you? Let's just say you're risking, I don't know, 250 bucks, right? Per trade. Could be more, could be less, whatever. You're just trading 250 bucks. Well, how many trades do you have to then lose? How many trades can you lose in a row, right? So one rule is this that if I have a winning day, I never let it go turn into a losing day. Period. Hard stop. Right. So where does so if you start at the beginning of the day with um let's just say you have $1,000 daily loss limit. Ideally you'd want to, 2 to 1 for a goal, right? Right. Whatever it is, Duncan, $800, thousand. I'm just rhetorical question, example, right? But if you're up $1,000, okay, so here's the thing: you start at zero at the beginning of the day, you got $1,000 loss limit, so you're willing to lose $1,000 right out of the gate. That's part of your plan. You hit the $1,000, you're done for the day. Okay, that's that scenario. But now we have a scenario where you're up $1,000 and you're doing well, everything's running good. Do you want to stop at 1,000? Well, in the scenario that I'm describing is we want to go higher. We want to go more. I want more, right? And you risk $250 per trade. So what how many trades then can you effectively do? 4. You could say 8 and say, well, I'm still willing to lose $1,000 for the day, but if that's part of your plan, okay. But if you're up 1,000, you're in the money for 1,000. I don't want to give I don't want to go back negative. Again, that could be an approach. Solid, that's a sound approach. I don't want to give it back. I don't mind giving some of it back, even all of it back, but I'm not. These are the things you have to lay out in advance, right? So you have 4 trades that you can eventually work with, right? So again, that could be an approach where maybe you say to yourself, I'll give it 2 trades. So I want to walk away. I'm up 1,000. I want to walk away plus 500. So since you're risking 250 a trade, you have 2 more trades ought to be the exact type of trade that you got you to the $1,000, right? Does that work? Does that answer the question, there, Duncan? Again, you just got to kind of decide how you want to unfold. You got to have again, it's what I was queried, back from my mentor. Do you have a plan for that? Or you just kind of like, I'm just willy-nillying it throughout the day and whatever happens, happens. That's not going to get you too far. All right. Duncan says it's a solitary workspace and easy just do without accountability. Yeah. That's one thing again, as part of a community that we have, again, I'm not, nobody's looking over your shoulder. All right. But here's something that some of the folks in our community have done is they've paired up with one another. In other words, right? Again, many of the people in the PTG community have, become friends with one another. Long distance friends, right? Pen pals, but effectively they're friends with each other, right? And they can hold themselves accountable. In other words, I'm gonna. This is what I did today. I'm gonna pass my performance on to you. You pass your performance on to me. So you're accountable to somebody, right? And again, they're not going to be, they're not the principal or anything. They're not, but they're there is, hey, there's accountability. This is what I did today, or I really messed up today, or I did well today, and let's review together. Okay. So what we're trying to do here as well in the Pitbull community as we build this out. Again, we're in the very early stages of this, right? Um, it's not like the folks on ScrewTube, okay? And everybody comes together, which is one guy, and it's a whole, you know, entertainment fest. I get it. If you want to be entertained, it's like Russell Crowe in the Gladiator. Always reminds me of that, right? Are you not entertained? All right. Well, you know, we're everybody in our community, in this community, and as we build Pitbull out, we're serious. We're serious. We want to get the job done. All right. But yes, we want to have fun to a degree. But this is not going to be. If you want a joke session and whatnot, there's plenty of those out on the screw tube. You know. But if you really want, a community that is helpful, and like you say, accountable even, you can pair up with, you know you could even have your own little small group within our community, that type of thing, do after hours stuff. Make yourselves accountable to each other, if that's what you feel you need. I mean, and it's not, n- nobody's, and that's another thing, right? And that's another thing that you get those people out on YouTube, everybody's a winner. Everybody's a freaking winner, right? Yeah, right. Okay. Good luck with that, right? And, if you want to, drink that Kool-Aid, go ahead, right? But you're only hurting yourself if I'm winning here, or I'm winning there, I'm winning here, I'm winning here, right? And it's a bunch of bullshit. Don't believe it. Don't believe the hype. I can assure you. Right. Okay, so have a rule for that there, Duncan. Right. So Duncan says, all my bad decisions when trading them on my cell phone when I'm away from the command center. Okay, so question, Duncan, do you have a plan for that? If you see that's what happens, see that's metrics, right? You're seeing performance, right? That's metrics. So that's your own personal metrics. I don't do well when I'm on the cell phone away from the command center. So why continue actively trading? You could check the market out, all right? Check the market out, but monitor what's happening. But yeah, overconfidence, all right, or whatever the reason. I don't want to get into all that for yourself, but figure it out for yourself. You know what it is. And then I ask you, and my question just becomes, do you have a plan for that? What's your plan to stop that? Right? Start to be honest with yourself with that. Like I said, nobody's looking over your shoulder but you, right? Nobody's, nobody, you're accountable to yourself. So, create an avatar if that's the case. If you don't want to speak with somebody else, create an avatar where you actually are reporting what you're doing to somebody else. Kind of an avatar. You know. Yeah, when things blow up, then I have to have a plan for that. I have a plan for the plan. Yeah, have a plan for the plan. You know, just have a plan for it. What's the, as you have to be your own self coach as well. Like if you were like, right? So, and again, it's kind of the same idea is that, you're coaching them to become better and then keep encouraging them and so forth. Well, you have to kind of do the same thing for yourself. You got to self coach. I mean, you can literally get a coach, you know. My services are available, but again, you could literally have a coach, but really, you really should be your own self coach. All right, cool. Um, Bruce says, "What's even worse are the TikTok bros." Yeah, I don't even watch TikTok. I don't know. I don't have any of that. Right. Yeah, John says, "I have some data, practical R value to achieve." So you're talking reward uh, each year on average. You know, the return. Yeah, okay, return. It's interesting because that that's not an easy it's not an easy question to answer because traditionally, the metrics are, based upon like $100,000 account, and I made 10%, 30%, 15%, and so forth, right? So on actual capital, but what we do is, we have leverage capital, right? Now, John, on yourself, John's running his own real money. So, but it's still leveraged. We're still trying to get that firepower. All right. In it. So, we can, in futures, you can really supercharge your returns. So I think at the end of what you have to kind of think about, perhaps the way to look at it is, um, yeah, what's a solid return in the industry? Well, again, it's how you're measuring it. Are you measuring it without capital? I mean, without leverage? Base capital. So let's just say you start off with $100,000, and of course you're going to use the leverage that we have available to us, right? So you start off with 100K, and let's just say at the end of the year, I don't know, you're up, you know, 50K, right? So 50%. Okay. So, but, okay, so you got 50%. So you could say, yeah, you want to measure it against your risk capital. You could say that it made 50%, and that's accurate, right? But there's a lot you have to filter in there before getting a final, all the various ratios and things, risk, uh, all the various risk assessment ratios. It's not an easy question to answer in a straight, format, right? But if I made 50,000 on 100,000, I'd be damn happy. Okay, I would be, you know, I'd be very pleased with that. Okay. But, some people would think that, well, because I have all this leverage, I mean, oh, I start off with 100. I made 100. So I made 100% of my capital, but again, risk adjusted returns. That was the term I was thinking about earlier, right? You have to measure what's my risk adjusted return. How much risk did I have to take that? And what happens is a lot of people, to make really outsized gains, they tend to actually take outsized risks. All right. Most of the gains come from the daily grind, right? Little here, little there. And then but if you're doing the daily grind and you're managing a position, so what I always try to do is think about it. What I always try to do is, you're taking your trades, you're hitting base hits, right? Base hits, doubles type of thing. But in all my trades, I'm trying to have a runner. Okay, and if the runner should never hurt you, right? But if it takes off, okay, then um, it can really supercharge some of those returns. I think the runners, when you catch a runner and it works well for you, that covers a lot of those stop out losses that you get. Right? That's the idea. So we're trying to kind of cover a lot of those because most of the trades that you can end up doing are just going to kind of be blocking and tackling, base hits, doubles, and that's really where the sweet spot is. Okay, on where your returns are going to come from. That type of thing. So it's not an easy. When you see people quoting all these crazy returns, again, total BS. All right. Start off whatever your risk capital is and then just you know grow that. That's all. I mean, and again, what's a good return? I mean, let me tell you something. The We have greater opportunity because we trade less capital and we're like speedboats. We can maneuver the markets much better than in a big institutional, right? Because they're like the cruise ships, right? The oil tankers. It takes them time because they're so large and they can have such an impact in price. So they're really subjected to the market in a much greater way than us, right? So our individual returns could really exceed 100 or many cases 200%. I'm not joking, right? But again, that's nothing's obviously assured, but you can have some really monster returns and say, "Wow, this is what I did. This is what I did." And also sometimes when you'll see people quote various returns, they don't tell you maybe there was an options play, and so of course, what are options going to do? Right? They're gonna supercharge your returns. Now it's going to appear that you've supercharged it. You know and again, there's a lot of information that is left out when we're talking about returns and performance and everything else, right? So it ultimately comes down to kind of the individual approach. So that's why I said it's such a hard, it's not an easy straight up answer. 100% is what my back test practice has results, and I am kind of not believing it. Seems too good to be true. Well, um, I know you can be really skeptical with that, right? Yeah, and the skepticism is warranted, right? Is warranted, but you know what? Think about this. Just accept it for what it is, what it has shown, because, and then, as you're working, your account, uh, the idea of looking at that and seeing what those type of results have been, and I look at it as potential because you weren't there, the conditions at the time, et cetera, right? So, but as you progress, the idea for me when I'm looking at results like that, and you're skeptical of those, I'd say, well, this is the potential. I have to make it happen. But that is the potential. And that's really what it all comes down to, because people have asked me as well. They take a look at some of the results that are posted on the website over the years. Now I don't track them any longer because I've gone well over 10 years of tracking, so I just don't track them anymore. All right, it's just not worth my time at this stage. All right, because the more I track them, nothing's really going to change. I'm not going to move the needle on our setups and so forth that have been tracked over plus 10 years. All right, just not going to move the needle. But people then ask me, well, can I replicate those results? And I said, no, you can't. I said, I couldn't even right now. Well, why not? Well, because it was then at the time and the conditions at the time, and et cetera, et cetera. I said, but what you want to do is you want to use those and saying, well, this is the potential historicals, and it has a lot of great potential. And so, it, you can accept the past results for what they are. So same thing with your testing, John. You can accept the past results of what they are and just use them as a guide to say this is the potential. And then you just start working that potential for yourself. And then maybe a year from now, you say, well, these are my results versus, those historicals. To me, if there's some sort of correlation, directional, equity curve, then they're valid. You may not have hit 100% or whatever the value is, but if you're correlated in that direction, then it really becomes, just a continuation of, you know, taking those same trades. Maybe again, it all comes down to, like, are you taking the exact same trades in the exact same way, manage them the exact same? And probably not, you know, not to say that it can't be, but I'd always say that I know it's probably not the exact. Yeah, not so when okay, so even that not fully. So that not fully is not going to get you to the same type of results that have been published and that you've done in the research, right? It doesn't need to. This is what everybody freaks out about. It doesn't need to. You just need to have the correlation there, right? You need to have the equity lines running in the same direction. Then you'll say, okay, it works. I believe it. But give yourself some latitude to say, well, probably not going to execute them in the exact same way. I'm going to try to as closely as I can, but as long as the equity curve is running in the same direction, that's what you're looking for. At least from my perspective. Thanks for trying to answer. I know I tried. I mean, it's not, again, not an easy question. I don't know if it helps. It's like I said, it's not an easy question. I Poor wording. No, I understand what you're saying. I understand. But truthfully, it's not an easy answer. It's not a black and white answer. You know. And again, it all comes down to, I think you know, it's okay to accept the results that you're getting if you're truthful to say that I'm following the method and the system as closely as I can, uh, and I'm making progress and keep moving the ball forward, and then and have the confidence to say, well, it'll all work out. If I continue to do what I'm doing, it'll all work out, right? Very skeptical at the time, no matter what you're doing, not just trading, but a lot of things, right? But just keep staying focused on what needs to be, and you're going to miss trades, absolutely. So, all right, that's going to be it for me today. Hopefully this has been helpful for everybody. uh Traders are like priests, and the market is our god. All right, our job is to ascertain and follow the will of the market every day as best we can. Magister, I refer to that as just staying in alignment. That's one of the core premises for what we do, is just stay in alignment. We're gonna have losers, we're gonna have winners, etc., all that, but so hopefully everybody's is beginning to, for those of the kind of new and visiting now, you're gonna get a sense of each of the presenters. We're gonna be onboarding some more beginning of April. And as time progresses, we're going to be onboarding some more uh, folks that will be talking about crude oil directly, crude oil. So if any of you crude oil aficionados, we got a crude oil expert, right? So you're going to learn a lot more about how to trade crude and so forth. It's not you know just pricing, but it's a lot of involved when it comes to those various commodities. Agricultures, anybody interested in ags and stuff, right? This is going to be, we're coming into the planting season and so forth. So, we're going to have an ags expert. She's going to be coming on soon. And for you guys doing some swing trading, some longer term. So I've gotten inquiries uh, over the time about swing trading ideas and things like that. So we're gonna have a somebody that focuses on swing trading. So if that's gonna be of interest, again, may not be day trading like we're doing here every day, um, but it could be doing stuff intraday, and then but I want to learn more about how to manage something more on a swing basis. All right. So we're gonna have folks that are going to be, primarily talking about swing trading and some of the strategies there. So that may be helpful even in perhaps your IRAs. All right. So, as we build out, the community here, uh, we're dedicating areas. We're going to have dedicated areas and topics. All right. So it's not just, day trading hacks. I just say I'm a day trading hack. Win, lose, or draw, I'm done at the end of the day. But I also run my own longer term portfolio, right? So swing trading, I do some swing trading, do some options trading, but I don't talk about that stuff during what we do here in our community, all right? Because it's not the subject, it's not the environment. So we're going to be bringing on folks that are talking about that, and maybe give you some ideas about how in your own stuff? I'm assuming most everybody here is kind of self-directed with their IRAs and whatever. Okay, their own accounts. Most everybody that's trading, it tends to be a self-directed. not somebody that just has stuff in a 401k or whatever. So, and anyways, we're gonna have folks doing all that. So, as we build this out, um, I think it's gonna be more than these screw tubers, right? You know, I mean, nothing against them, nothing against the screw tubers, but that's not the main mission of Pitbull Traders. So, all right. Well, thank you very much, everybody. I don't know if Manny is back up and running. I'll leave the charts here in PTG running, but I'm gonna come off mic. All right. But continue to share, continue to ask questions and comment amongst yourselves. This is again, this is not just me presenting today or Manny presenting and then Bo, and everybody else. It's just everybody, sharing, right? As the saying goes, sharing is caring, right? So feel free. This is your community. Um, Interact and engage with it, as deeply as you want to. All right. If somebody has questions, in the pit room or whatever, I'll be happy to. Again, can post, but I'm just going to come off the mic. All right, I'm going to go get some refreshments. Manny says we'll go with a live workshop on the clock. Okay, good. As soon as he gets up, systems up and stable. So stay tuned for that. He's going to talk about the Wyckoff clock or whatever it is. There's a lot of good stuff that Manny can. All right, so 12 to 12:30 today. So, all right, good. All right, everybody. Let's see. I think this is my last Wednesday. Yeah,